All right. Good morning. It is 7:05. Oh, I didn't know it was that late. Sorry. Welcome to QuantBox Live. About 2.5 hours before the open of trading. Time to get your global macro on and uncover the best fundamental opportunities out there. We have a lot to go over. Mondays are busy days when it comes to macroeconomics. Yes. We also have the aftermath of a presidential assassination attempt, and then do you remember way back on Friday we had a central bank intervention? Remember all that a million years ago? Yeah, well, that's still out there. Okay, it's still out there. So, anyways, we got to take a look and see the longer term stuff well before what occurred over the weekend. But also because we have not just long term economic research, but we have very recent, almost real time economic research. So, this is a great platform for you to find what the trends are so that you could trade the trends. If you're trading trends, you can let your winners run. And if you let your winners run, you can be a successful trader and investor. So let's take a look. Let's get in there. If this gets to YouTube and you're watching on YouTube, hey, why don't you try it out? It's $8. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Let me get into the QB. Let's go to the Pro. Now, over the weekend, if you're a subscriber to the AI alert service, you got the COT report emailed to you. Logging. We've been doing a lot. I tell you all the time, and you don't see changes, but there's a lot going on. Yeah, people have been working very hard on the back end, and some changes are coming very, very soon. I need to have one or two more team meetings, but I could release something, but I want to have one or two more meetings. Anyways, so here we are. Let's take a look and see where we are in the response to the world's, or I guess I should reverse it, the world's response to recent events. Right now, yields are down. Not sure if that is going to be the case today. Maybe. So if people are afraid, you could buy bonds because that's a risk off thing. And maybe these yields come down. Maybe. Or people say, well, this assassination attempt will somehow solidify the Republican Party, make Trump look strong, and all this. And now Trump is definitely going to win. And so now then you get sort of a mixed bag where he cuts taxes but raises tariffs, which is a tax basically. and it, but So it's good for some and bad for some, and all of a sudden you're like, it's really unclear, the strategy. you know so anyways, I'm open-minded, is what I was saying yesterday during the day trading group. I'm open-minded either way to see. I'll let the market tell me. But anyways, right now I don't think this reflects new trading. This is basically Friday's close. Oil, okay, at 82. All right. That it's not terribly surprising that it's worked its way down. It's not crashing, but I think we could get into the 70s. Gold could go up again. Like, there's different narratives that might be presenting itself. So I'm not saying I believe any of these narratives. They're just narratives that are moving the market or could move the market. One of them is based on, um, you know, the assassination attempt, or maybe what is said now at the Republican National Convention, which is starting today, that Trump is definitely going to win. But if Trump wins, then, like I said, he could raise tariffs, and if he raises tariffs, it's inflationary. How do you hedge inflation? You buy some gold. Okay, you see, like, how these are all plausibilities, but we don't know if that's what's in play. But now keep that in mind. Okay. If Trump raises tariffs, that's inflationary. You hedge it with gold. Gold goes up. We're on our way to 3,000. Okay. That kind of stuff. Like, there you go. Pay attention to that plausibility. S&P 500. Once again, their response is, if there's a clear winner, doesn't matter who. If there's a clear winner of the presidential election, stock market's going to go up. So, again, I'm not saying I believe this, but there are some in this world that would just now say, well, that's it. Biden's out, Trump's in, boom. Stock market goes up. Well, what's the reality of it? Well, that's not necessarily true. So, later it comes back down. But that's one play. If you own Truth social media stock, which dropped 90% this year, is now up 50% today. Yeah, it was up 56, I think, at one point today. So anyways, so yeah, it's up, probably be down later, whatever. All right. Not any crazy dollar strength. So when I checked the markets on the early open, when New Zealand opened and Australia opened, there were some gaps, but there were not huge gaps for dollar strength, meaning an assassination attempt freaks the market out and everybody goes, cold turkey. Everybody gets out of risk and into safe haven flow. That was very likely. I've seen 800 pip gaps, and they're little tiny little gaps, and nothing really big. Nothing. I mean, basically nothing, right? And anyways, now looking at euro dollar, or what I was going to say is, in those sessions, nothing really happened. Apparently, it was a holiday in Japan. So at the Tokyo Open, I checked again. Once again, not a big gap, nothing crazy going on. Then I had to watch a soccer game. I No, not the first soccer game, the second soccer game. When was the last time I watched two soccer games on TV on the same day? Let me think about it. Never. Yeah. So, anyways, checking the markets, and nothing really happened. Yeah. So I guess that's good. Okay. Yeah, I guess that's good. And Bitcoin up, way up. Okay, and that's a risk on play. Interesting. All right. Well, let's do some further analysis. Let's take a look at the risk gauges. Again, this is probably not even really live yet. None of the markets are really truly open. But do you remember? I believe Friday, everything was risk on. Take a pause. Okay, be careful. Speaks volumes. The nothing speaks volumes. It was four. I think on Friday it was 432. Yeah. So be careful. Okay. Be careful. Just whoa, be careful. This is still very much risk on. Okay. This is still risk on. Bitcoin cray. Okay. Nikkei way down. Okay. That's going to indicate yen strength. One of the things that might be impacting the markets a little bit, going just back to normal, macroeconomics. Remember that stuff? The recent Chinese data, it was pretty pretty low economic activity, low retail sales, low industrial production, low everything. Lower real estate home prices for existing as well as new homes. Like just everything's uh, nothing really good out of any of that data, and that could drag some of these markets down too. On particular commodities, so that you might look at oil and see oil coming down. You're like, yeah, well, oil demand from China was down. In fact, energy demand in general was down. Even coal demand was down. Yeah. So, anyways, take a look maybe at only the stock market indices. Like when I look at this, I don't see anybody freaking out. No, this is a big deal. That's definitely risk off. With all of this, look at Russell leading the way. Russell, what does that tell you? Most likely the play here is the Fed's going to cut soon. July? No, not July. Come on. But Sep, yeah. Now, if you want to check the percentages, if it makes you feel better at night, go ahead. You can go to the Fed Watch tool and check. I do it all the time. You can check. Okay, dollar strong, dollar strong, dollar strong, dollar neutral, dollar weak, dollar strong, dollar strong. So dollar strong in general, euro is slightly stronger. So again, slightly risk off. Okay, and you can see here bearish unexpected, bullish unexpected. Thank you, Jim. Yeah, that's amazing, isn't it? 2 weeks ago it was 70. Yeah. But you can see, like, what I've taught you guys is when that's happening, the dollar typically will weaken. And in this case, it hasn't. So there seems to be something else out there too. And it might just even be seasonality. Like this doesn't show me like the markets are freaking out. QE was already weak. It's way down. There's nothing surprising about that. So yeah, look, the market's not freaking out, and the biggest loser is down. Was it not even a 0.5%? Like the market's not freaking out. So if anything, we're rotating into seasonality, is what it feels like to me. So we'll see how much more there is for the stock market to head up. Let's take a look at the calendar, plan out the week. Okay. Look at that. -6. We're hoping for a -5.5. I guess that's a bad thing to hope for, huh? Yeah. Yeah. Just don't look at it. But okay, not a market impacting thing, really. Canadian CPI tomorrow. Okay. Yeah. 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 All right. Yeah. That'll be important for Kitty Cat. Retail sales in the United States of America. Is the consumer still alive? If they maxed out their credit cards, their savings are gone. Time to buy Abercrombie and Fitch stock or sell. I heard there's so many different stories about how different forms of retail are changing the process of their business because of changing consumer needs. We'll call it. Like restaurants, for example, can't raise prices anymore, but their rent is up and the cost of their employees are up, and they can't, and and they've raised prices for their food because of it, to the point where people don't want to eat out anymore, and people are rebelling against tipping. And so one of the things they've started to do is, for a side dish, add Brussels sprouts. Now, I love Brussels sprouts. Most people hate them, but they're cheap. So you see stuff like that, and apparently, Abercrombie and Fitch, their age has changed, because now their clothes are so expensive, even the kids don't want to buy them anymore. The kids would rather go vintage clothes, dumpster diving for their outfits now. And so they found the Abercrombie and Fitch consumer now is the 20-year-old from 20 years ago. So now they're 40. So they've turned down the DJ music and the while you're shopping through your $150 t-shirts, right? And so now they've turned the lights up too. This is the CEO was talking about that. She's like, we turned the lights up, we turned the music down, and there's 40-year-olds everywhere. They're scrambling like deer. Whoa, whoa. Look, there's 40-year-olds at the mall. Yeah. So, anyways, hey, 40 is the new 20. Yeah. So it's really interesting to see just lots of different things are changing as money becomes scarce, and economics is a study of scarcity. So we'll see how retail sales are doing. And a lot of this is heavily impacted just by how much gasoline you need to buy. But this does get broken down in different ways. And the red book is something that you could read, not the green book, not the blue book. There's a red book that has to do with retail sales as well. New Zealand CPI, yeah, anything with inflation, everybody's worried about. New Zealand is, it's a strange land right now. High prices, low productivity. Australia, but as New Zealand has always said, not as bad as the Aussies. All right, then we go to the UK. The Brits. I don't know if they're showing up to work today, but by Wednesday that should be sobered up, and then we're going to have some sobering news. Extremely high inflation and very low productivity. Yeah, and then almost victory. They almost won their soccer game. Kinda. Yeah. Anyways. What else going on? Aussie jobs report. That's always a good one. That's a fam favorite. Okay. That's usually you can pick up 50 pips scalp on that. Thursday. Yeah. Okay. Interest rate decision. Obviously, that's going to be important. Friday, UK retail sales. I mean, look at the confusion going on in the economy there. Last time it was 2.9. This time we expect negative 0.6. You're like, what? It kind of says, yeah, well, we have no clue. We threw a dart at the wall, and that's the one it hit. It could be hugely positive. It could be negative. We're not quite sure. It's tough times. And then retail sales. Yeah, out of Kenyatta. Yeah, which reminds me, somewhere next week, I don't even know. I think I'm not going to be around. I think I'm not going to be around Friday and Monday, maybe Tuesday, just so you know, of next week. Not this week. This week I'm around. I got to go save Canada. So I'll be up in the Great White North, eh? Yeah, drinking some Molson, shooting moose. Yeah, so I'll be up in the Kenyatta land. I got to do a quickie up there, but I'll be back quick. Right. Yep. If I run into Trudeau, I'll have a few words with him, but I don't think he's ever been to Alberta. So I had a pretty low chance I'm going to run into him. Yeah. So anyway, I don't know. I'll let you know when we get closer when I'm leaving, but not this week. Next week. Cool. All right. Denise, is the COT updated? I might as well just ask you before I even get going. Okay. One of the things we need to add is, and they said they would do it, but we've been doing some really, really serious upgrades in the back end stuff you can't see yet. But one of the little minor things is I want to add like a timestamp, like right here, that shows when it was last updated. I was 90% or 95% sure it was, but technology is a funny thing, eh? Um, but the reason 95% sure it was is I got emailed Friday. Let's see if I can find it. Mm, 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 mhm. I have too many email addresses. I never know where it goes. Mhm. COD. No kidding. No, I'm not market open. My mouse is even fighting with me, so I don't know if I'm going to be able to do this. Why is it so terrible? S- okay. Mm, mm, mm. I'll look just a few seconds longer. I must have it on it. I think it's this one. I can't find it. Market open report. Yeah. Well, I have a lot of problems. One of my problems is I get way too many emails. I get hundreds and hundreds and hundreds a day. All right. So let me get back. I can't find it. But on Friday, I think it comes out at 4:59 or something. Like it's right on schedule. We get an email on Fridays that gives you a summary of what's changed on this page, because well, it's hard to tell. It's hard to tell. So um, that email is really nice because it tells you the important changes and just makes it quick and easy. All right. So a couple of things. You want to start the process of looking at the capital stack. This is the positions of hedge fund managers. This is their long-term holds. They are long gold. There is no doubt about that. Okay. Okay. There is no doubt about that. Denise, you said you got yours at 3:38. There might be a timestamp issue. I know there's one or two places on QuantBox. There's a server time conversion error where it's off an hour. That because that doesn't make sense because it comes out at 4, so you probably got it at 4:38, not 3:38. But if it says 3:38, like either then yeah. So anyways, yeah, 4:38. That would be actually pretty early. I usually get mine closer to 5. Like really, I think almost always it comes out at 4:59 or something. Yeah. Yeah. But yeah, it would have been 438. So long oil, but I am no longer long oil. No longer long oil. Now I understand this is the stock, but I believe this is going to change. Okay. And the reason I believe it's going to change is seasonality. So that is what is. So now we need to track the flow. Is money going to continue to move into oil, or is oil, trading? In this case, those are long oil. Are they going to slowly get out and have and are we going to see oil, go to the right of silver and then go to the right of the pound and right of the kiwi? Well, the way we check that is through the net change. So, man, this mouse, I can't believe it. Look at this. It keeps going to the right. Why does it keep going to the right? Oil. Okay. Definitely. The market is definitely, beyond a shadow of a doubt, bullish in the way that it's already made investments. Does that predict the future? No. It's a measure of the past. What did they do in the past? They own oil futures, not to hedge, to make money. So, what we want to see is what's going over here. Is money going into oil this week, or is it coming out of oil? See, we could have money coming out of oil and only be 79% long. Well, it's still bullish at 79% long, but it doesn't matter. It doesn't mean it's still as bullish as it was. And so this measure now is not very recent. It's the most recent data. But remember, it doesn't reflect today. It doesn't reflect Friday. It reflects Tuesday, or up to Tuesday of last week. And so this will get more and more interesting. So put this on your to-do list. The way that you use QuantBox is you look at seasonality in QuantBox. And if you saw, for example, that somewhere around this period, an asset typically goes from bullish to bearish, then on this analysis, you watch to see if the asset slowly goes from bullish to bearish. There's the total investment, but then there's the direction of the flow. So there was a positive net change, but it wasn't really bullish. At that time, and remember, this had a lot to do with the hurricane way back then. I know it sounds like a thousand years ago. Okay, bears got out. That's all. There is no real statistical bullish. You're like, oh my God, 0.2% more bullish. Yeah, but negative 3.6 less bearish. It was a bearish issue that made it not, you know, so and do you remember the behavior last week? People were long because of the hurricane. I did 3 or 4 training sessions on how to do it and why to do it and how to track the National Hurricane Center and all this kind of stuff. And a high pressure system in the United States didn't change, so it kept Hurricane Beryl low. And what happened when it was clear that it wasn't going to take out the oil industry? Do you remember that giant red giant red candle? I remember because it took out 3 days of profits in about an hour. I remember it well, right? Because I was laying on my office floor in a pool of tears, right? My money's gone. My money's gone, right? Yeah. Yeah. But it wasn't bears. Everybody realized the trade was over and they're oot, as they say in Canada. Huh? So anyway, so this was all about bears, but it's not bearish. But it certainly isn't bullish either. So again, you spend time in your research. Remember, QuantBox in many ways is a very detailed research platform for you to make more informed and better informed decisions. So you can do some seasonality and then go see, is it starting to happen? Is something that was bullish that you think could become bearish? Well, is it becoming bearish? A giant red candle doesn't necessarily mean bearish. But now, as we follow up our research, it could be becoming bearish. And then you understand what is happening and why it's happening, right? And then you can let the winner run because you know what's happening. Hey, oil's been up for 6 months. Doesn't mean it can't be down for 4. So, anyways, what else is going on? Big move toward Aussie. Okay. Yeah. And real buyers. But the market's 50-50. It's not a great market. But there was some real buying. What's going on there? Do some research. Why are we suddenly getting a 27% increase in bulls? Well, go figure it out. That's your job. Okay. Should you be buying it? I don't know. It's the market's 50-50, but is it going to be 60-40? I don't know. Is it seasonal? I don't know. You got all these tools. Go figure it out. But you shouldn't be ignoring it. Nikkei was up quite a bit, but we know as of today it's down. So what's going on? Is it good? Is it bad? Should you be a buyer? Is it all the yen? We had an intervention on Friday that is not being, uh, uh, um, the data doesn't reflect that intervention here. This is days before the intervention. So, how do you feel about that? Should you take a look at Nikkei today or the yens today if it looks like it, last week there were tons of buyers? What are these buyers going to do? Because remember, this is new capital flows. This is cash flow. This is new money being traded. So, what do you think this 4% increase, okay, in capital flow, or this 17% of new contracts that were bought on Tuesday, and then there was intervention on Friday? Do you think they did nothing? Do you think they stayed in? Do you think they doubled down? Do you think they got the hell out? Like, you know, what do you think? Because this is all new money. They've only been in it for 3 days, and then wham, 300 pip red candle. What are they? What would you do? I don't see, but there's a story here, right? Yeah. So I want you to learn how to use this data. It's not just numbers. Okay. Did they get stopped out? I don't know. Okay. Pound has had a tough couple of years, but it's becoming more and more bullish. Politics are a mess. Uh, but was it King Charles? It seems like when he became king, the pound got strong. There was a long time where the pound was like not good. And all of a sudden you're like, wait, 73% long, 2.29% weak. That's a lot of new money week over week, huh? And that's bullish. Look at that. Holy smokes. Pound is getting strong. But if you look at the economic data, I don't know. I was going to quote Shakespeare, but then I realized he was talking about Denmark. So that doesn't work. So, anyways, insert Wayne's analogy here. Yeah. So, anyways, interesting money moving into euro, but 50-50. Okay, is that good or is that bad? Well, look at this. There's the news. Okay, euro dollar's up, and it's really 11 or 12,000 less bears, and it went up. Nobody bought it. The market's flat. Nobody cares. But a bunch of bulls got out or bears, a bunch of bears, almost 7% of the bears left the market. So the sinking canoe popped up. It's just a sinking canoe, right? It popped up. Okay. So, no buyers, really. Statistically, very few buyers. Yeah. All right. Silver. Yeah. 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 Silver. Yeah. Remember, we were watching silver and gold last week. I think I picked gold, then silver went up. Then later on, I picked silver, then gold went up. Yeah. That's why, when I trade the yens, one of the things I've taught is I end up betting on all the horses. If you want to use horse racing as an analogy, right? Yeah, they're all going to cross the line. What order? I don't know, but I'm going to win for sure. I just bet all the horses are going to make it around the circle, right? So what that means is I usually like buy Aussie yen, then Kiwi yen, then pound yen, then euro yen. And eventually, I own all the yen pairs, dollar yen, and then I switch all the way back, and pretty soon I'm buying Aussie yen again, and I'm stacking, right? I'm stacking them up. I'm pyramiding slowly but surely, but anything with a yen on it is, you know, so anyways, in that case, you know, I should just be buying gold and silver, I suppose. They're heavily the same. In this particular week, gold went up a lot. Or sorry, silver went up a lot and gold went down about the same amount. I just picked the wrong horse. Should have bought both horses. They would have averaged out of zero, right? Made money on silver, lost money on gold. What happened? I don't know. Right. So, anyways, but that's shooting at rabbits, I guess, right? Yeah, that's how it goes. I should have shot the one on the left, not the one on the right. Yeah. And no, that wasn't a political metaphor. Yeah. Dr. Copper. Yeah, yeah, that's a little bullish. Dollar, a little bullish. That's a little risk off. Bitcoin, kind of flat. Look in the market 50-50. That's very interesting, isn't it? I've deferred and delayed my Bitcoin. I need to. It's up today. And, so, anyways, I got to play some Bitcoin today. Don't want to, but kind of have to. What else going on? What about the biggest loser? Yeah. Okay. Nothing worse than a Kiwi dollar. But we already knew all that. Whatever. And guess what? Kiwi dollar's down. Yeah. Well, dude, do you see how many emails we got last week to say sell the Kiwi dollar? What was it, 10? So it shouldn't be surprising. US stock market flat and falling. Again, you're like, no, 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 SP 500 is up. No, 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 no. This is how many futures contracts are being traded by large institutional players. I'm not saying the price of the SPX, but we've lost, okay, lost a lot of institutional players. Okay, it's 50-50 and even a little bit short. So, how are the institutional players actually placing their money? Remember, this is not hedging. This is how they're trying to make money. And 8,000 less bulls and 35,000 bears. Institutional hedge funds have gone heavy short. What do you think? Is that important information for you to know as an amateur trader? Mm. You want to buy it now, huh? Huh? Now, what's the guy's name? I wrote a book. Well, we co-authored. That's a bit of a stretch, but I'm in a book called. It's right there, the Wiley Trading Guide. And what was the COT guy? Very famous. He's been teaching COT for 40 years. I can't quite think of his name. Does anybody know? Larry Williams. Thank you. That is very correct. So he wrote in that same book that I did, and a bunch of others. But anyways, yes, Larry Williams. This guy's great. Did you ever do any of his training, Jim? Back in the day, he did a lot of stuff on COT. Very long-term fundamental trader, but the only real fundamentals he cared about is the commitment of traders report. Yeah, yeah, he was great. He won a bunch of like trading contests based on this strategy. And then I think he even got his son or his daughter to trade, and they won the trading contest. And it was all based on COT, right? Yeah. Oh, is that right? Yeah, very, very, very cool. I think a key part of using COT. Okay, so I'm building up the credibility of Larry Williams. And his like primary use is COT. And the primary part of that strategy is the peak and valley of the commitment or traders report. What do we call that? Seasonality. So you would say there's normal times when all the institutional investors are long. And what's important is when they stop getting long, or when everybody's short and that nobody wants to buy some sort of asset and it gets super ridiculously cheap. Well, that's probably going to form a bottom at some time soon. And, so it's the peak and valleys. We call that seasonality because there's usually a pattern to this. And so, like Larry Williams, now I can't speak for him and I never met him, you know, we haven't had a man hug or anything. Um, but my understanding is that you want to start accumulating when you feel you're near a bottom or you feel you're near a top. You want to start slowly shifting, but you also want to probably hold. Now, think of it. He won all these contests, but he would hold a trade for 6 months, not 16 minutes you know, and brag about the 12 pips of profit he made, like a YouTuber, huh? No, in fact, the secret to it, and I've always taught this too, is knowing when to start holding and accumulating. And so right now we're very much of these assets are kind of the opposite, where you can imagine, okay, SPX was way up. We all know that. And the stock markets have been going up for months and months. And there's an AI revolution now. Oh, that is great. But the market's 50-50. It's going up, but with less and less institutional money. At some point, you might believe it needs to go up with institutional money and not just retail money. And then at some point, what if institutional money is actually anti up? They're actually shorting. Are you going to trade against institutional money? That's all the question is. I don't know what your answer is. You're like, that's my niche. Okay. Yeah. All right. Well, what do we know? Right. That's the other thing I've always taught you. What do we know? What are the facts? Just the facts, ma'am. All right. The market's 50-50. Seasonally, we're way high for this time of year. Yes, there is an AI revolution, so that does explain it. But then when we do detailed analysis of who is buying and holding, right now the market is actually 50-50 with less bulls, okay? 3% less bulls and 10% more bears, only on the institutional side. Holy smokes. I mean, that's a big deal, isn't it? So, are we in a period where a top might form? A Larry Williams might say, this is what the narrative you should be, forming, I suppose, or the analysis that you should be doing. Now, where I'm talking to you like now you are a professional institutional investor. Retail, this is way over your head. But I don't want to teach you to be retail. I want you to be smart money. You know what they call retail? Dumb money. Now, I don't like that and I don't think it's fair. But I do want to teach you to be smart money. I like that. That's fine. So we know these are facts. So how do you feel about the data that we're being presented with? And then if things technically change from the stock market being very, very bullish, it keeps going up 1% every day, to suddenly like, did it just reverse? Now, if it reversed and you're like, hey, institutional investors are net short and heavily shorting more, is it going to snowball and compound? Are they going to keep doubling down with their billions and trillions of dollars under management? Remember, these are hedge funds. This is not slow poke index retirement accounts. This is hedge funds. They're shorting. They're aggressively shorting. And will that accumulate? And if the market falls, what about the 46% that are long? Are we hitting their stops? The people that just bought the stock market 2 months ago, do they have the conviction to stay long all summer? I don't know. Now, if you were long 2 years ago, maybe the answer is yeah, they have conviction. But if they bought 2 months ago, did they jam their stop? Where's their stop? How close is the stop? Because when they stop get hit, that's less bulls, huh? So are these people getting stopped out by these guys? And is the bearish position going to accumulate? Is it going to snowball down? Because every time you hit a stop, it drops to the next level, which hits another stop, which drop. Because remember, most of the time the market is long. Nobody really likes shorting. So most of the market is long. When do they get out? When their stops are hit. Okay. So where are the stops? Now, how fast is it going to fall? So I want you to be thinking about this in the process of your strategic research and analysis. Okay. So I am long the stock market and I'm going to be long all next year, the stock market. Well, actually, for the next 25 years, I'm going to be long. But I did tell you in January that in July, it's going to start falling. And I said it wasn't going to fall to September. It's going to fall to October, not the third week of August, not the third week of September, the third week of October. There's going to be an extra down month. And I said that 7 months ago. Interesting. Is it true? I don't know. But I've lived through that process before. So has that started? Once again, you're the boss of your money. And if you're going to be a professional investor trading other people's money, that you're the one that needs to be thinking about this. You're the one that needs to be doing the research. And most importantly, responding to the change in the market position based on hardcore data, not fear. Okay. Yeah. Smart. I know, right? Yeah. So what's going on? Just kind of going on. Let's kind of, how do we feel? Bitcoin just crushing it. No. Yeah. I wanted it. It's so funny, right? I didn't like it at 53 because I thought it was going to fall to 50. So now I don't like it at 63. Like, but it's so funny, right? Like I should have bought it at 53. Yeah. But I know somebody who did, and that's all that matters. Yeah. Cool. Russell way up. That's got again, the narrative there is the Fed's gonna cut soon. They benefit the most. Okay. Because Russell is the most sensitive to interest rate changes. Yeah. Gold is up. Okay. All right. Interesting. Okay. Pound Kiwi up. Euro Kiwi up. Okay. Aussie Kiwi up. And yes, QuantBox has been screaming at you for that to happen. And it looks like they're doing quite well. Strong versus weak. Dow 40,000. Shut the back door, huh? Yeah. Yeah. When I bought, so the first stock I ever bought was Apple. That's $6. And Dow was less than 10,000 at the time. Yeah. But I'm glad I bought Apple because I think I made something like 57,000% return on investment on my first trade. And I only would have made 400%, right? Maybe 500% on Dow. So that would have been a loser trade. 500%? Yeah. Yeah. But 57,000% ROI on my first trade. Yeah. Yeah. So, not too bad. But yeah, 40,000 is a big deal psychologically, right? Yeah. S&P 500. Yeah, yeah, yeah. Nikkei. Yeah, yeah. All right, all right. What else? Biggest loser? Yen, 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 yen. Tough week for the yens and brilliant week for treasuries. Nice. Now, I'm worried about today. Again, I'm not sure how the rest of the market's going to respond. There's so many different thought processes about, and I'm primarily talking about the assassination attempt. Is it risk on? Is it risk off? Is it a relief rally? All these different things. And the United States is still very divided. I spoke to a lot of people since then from many different constituencies, but I spoke to someone who I would definitely say is a Democrat, and I was shocked at their response to the assassination attempt. I'm like, I'm not going to say what they said, but I'm like, oh my god, um, different, let's say, than everybody else I talked to. Just and it shows like how politicized and radicalized the country is. Um, hmm, hmm. Yeah. So, anyways, it doesn't matter if I agree or disagree. It's just what it is and where we are. And you're like, huh. So, like, I suppose if that's where we are politically, if you thought let's say, depending on where you are in the pendulum, way left or way right, I would imagine your response to the situation would be influenced by that thought process on how you place your money. And that's the part where, like, I'm just a Canadian boy from Saskatchewan. Like, there's nothing radical about me. Um, right? So I'm like, I, I have to be narrative because that might make me naive. Um, that there are people that are way out here and way out there, and I don't get it. But it does influence a thought process that I am exposed to in the markets, right? So that's why I'm like so in the middle. I'm like I'm sitting in the middle of the seesaw. That's kind of like where I am emotionally. Like I'm in the middle of the seesaw, and I don't nothing's happening where I am. But I have to pay attention to the markets going up here and down there, and I need to stay in the middle as much as possible. But it's a big seesaw. So I don't know, and I think you have to have the strength. Even look, I'm your coach, I'm your mentor, I'm out here like I don't know what's going to happen, so I need to be level-headed and open-minded. That's hard to do, right? But that's the role that we have. I will respond to any threats and opportunities that come my way, and I'm not predisposed to guess on what they're going to be, right? And like I said, because the doctrines on either side are so extreme, but that thought process will lead them to make and trading investment decisions based on that reality. Okay, right? So yeah, so that's where I am this week. Wide-eyed, bushy-tailed, right? The reality is this. If you want to see reality, oh, don't look at this page. Beautiful setup, right? So beautiful. If you want to see reality, I mean, that's actually funny. Like, there it is. It's supposed to give you the, but still, how funny. Yeah, there it is. Yeah, how funny. Um, cool. What else should we do? I guess that's enough. We'll have opportunities to go through economic data later in the week. Um, I think going through the COT is important. Um, if you're in the day trading group, I gave you fabulous, amazing advice yesterday. You missed it. Whatever, you do you. Um, but the second thing, because the people that attended or watched the video would have had homework to do over the last 12 hours with okay. Um, so that was important. And now as far as this is the page 2 that's important. So um if you watch the day trading video, do that, and hopefully you've already done it. Um Today you should look at the COT data and think about it like I showed you. Okay. Awaken your inner Larry Williams. What does it mean? How does it fit with seasonality? How does it fit with the market psychology? And how does it fit with everything? Okay. Think about it. Great. Look at it. Great. Are you going to change your behavior based on this information? Well, that I don't know. And then you go to here. How does this line up? It was heavily bullish on Friday, heavily risk on. Huh. Well, hell's bells. That doesn't look heavily. So what's going on? And really, I want you to think about it. Like, I want you to adjust your behavior. I think that's the successful part, or the biggest part of moving from retail trader to professional trader is that you have information to tell you that you should probably consider changing your behavior, and you actually change your behavior. And retail just shows up every day and fires off a bunch of trades on the same stupid thing for no particular reason. And there you go, right? And picking up pennies in front of a freight train. But you're different, right? Yeah, you're different. And so I want you to do a lot of thinking. People will pay you money to make wise decisions. Okay. Last week, we were even talking about as an institute, as a professional money manager, which is going to be you in the future, whether it's your money or other people's money. People will even pay you money just to tell them which currency to keep their cash and why, or when to convert it and why. That's it. Oh, thanks, Denise. Here's 200,000. Thank you for that advice. You saved me some money. That's it. And you're like, wait, that's it? Uh huh. But you can't do that if you don't have a data and you can't predict the future. So that takes some thought. It takes some information, and then you have to synthesize and analyze and synthesize, right? Yeah, yeah. So, anyways, you got the data now. The thing is, I want you to change your behavior. I want you to actually use the data and change your behavior. And so, what does this all mean, Basil? Well, that's for you to figure out. Hey, man, I'm here all the time. Peace on earth. May the pips be with you. May our profits be above average. See you later. Cheers.